The following is a presentation of TFNN. The Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Alrighty, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN.com. And let's check out where the markets are at right now. Looking on over at the S&P, it is down 5 1/4 points. We got the Russell down 2.3, Dow's down 29, NASDAQ is down 5. Not real exciting, but it's moving along, moseying along. The markets are sort of quiet right now. So that's why it's always good to make sure you have a couple different clubs in your bag when you go to play the game here. We're going over at gold. Gold is down 1 point right now. We got copper down 0.065. We got silver down 0.094. We got oil is down $1.38, so it's moving nice today. And it's always nice to have some correlated markets looking for good signals, but also some non-correlated markets. So that way, when one thing's not moving, something else is. Looking at natural gas, it's down 0.03. We got corn and soybeans. Corn is up 2 1/4. Soybeans is up 6.75. Going on over to bonds. Bonds right now, pretty flat on the day. We got dollar index is moving up. King dollar getting stronger right there, 0.757 up on the day. We got euro dollar is down, so dollar getting stronger against the euro, down 105 pips. We got the euro yen is down 66. Euro pound is down 43 points on the day. And let's see here, just got some stuff popping up in front of me. These charts load up. Looking on over at the pound dollar is down 32. Pound yen is up 48. Dollar yen is up 55. We got the Aussie yen is down 10. Aussie dollar is down 34. Dollar franc is up 21 with the dollar CAD up 97 pips. So we got a lot of movement going on right now in the FX markets and in the oil markets as well. Let me see here. Let me do a little mic adjustment for you. There we go. All right. And so that gets us caught up, gets you caught up on the daily report where everything is standing at for you right now. Okay, so with that piece done, let's go ahead and hop on over and see what else we have going on. We'll dive into, of course, to our news and everything else today. We got a euro dollar hitting its lowest levels since July. So moving on down over there, right there, like I said, hitting its lowest level since July. And so some big moves. Dollar got a lot stronger, as I was talking about King Dollar moving on up. And that's a fresh 3-month low. And that's Fed yelling there saying the economy is performing well enough that she acknowledged some slowdown in employment. Regarding monetary policy, she said the FOMC thought it could be appropriate to move in December, but no decision had been made. She reiterated that December would be live meeting as they continued to monitor data. So people are really watching those employment reports. That's going to make unemployment claims a little bit more hot than it has been. Okay, so whenever the Fed decision is weighing heavily on investors' minds, then unemployment claims actually usually have more of an impact. So be aware of that. I'm not just talking about NFP. I mean, the actual just Thursday unemployment claims, a lot of times will have a little bit more of an impact whenever people think that there's a high likelihood of a Fed decision or not, and it really weighing on employment itself because it becomes a focus. All right. Going on over, checking out the dollar index, moving on above 98 as the euro hits that 3-month low. So King Dollar moving on up. And why? Why is the dollar moving up? Well, because if they raise interest rates, right? If they raise up interest rates, then that makes the dollar worth more money because you're getting more interest for having it. Even though it wouldn't be much, still, it still raises the value of it, okay? Making other things cheaper, usually. as it becomes worth more. Wall Street is moving down, moving up. Not a whole lot happening there. Like I said, they're pretty much it's like all of them right down. NASDAQ included are, either in negative or barely in negative territory. Energy sector moving on up, but overall market sort of, flat to negative at the moment. If I go on in, we got European shares. They're moving on off their highs after the U.S. data. And Volkswagen and Porsche fall more than 7%. So that's sort of being the driver of the DAX lately. And VW right there. And something you may want to, check out, be watching those as you're watching the DAX right now. A 7% move. And let's see here. What all they got on this? But it was just a massive, massive move. The stock 600 autos and parts index was the top loser in Europe. That big shockwave in the Volkswagen story that came out where they were basically cheating on the CO2 emissions, and they admitted it. And so, that obviously had a big impact on their stock. So, anyways, either way, you got that. You got Federal Reserve looking to lift rates potentially next month. And the big scandal with Volkswagen coming on out. The FTSE 300 rose 0.9% after initially gaining as much as 1.1% on a fresh pledge from the ECB, the Euro Central Bank, sort of like the FCM, to ramp up stimulus if necessary. So, hey, if we need to pump, and we'll pump. And so they made that ongoing commitment, whereas the U.S. has said not so much. But they'll follow either way, the U.S. and where it goes. Oil briefly knocks off some losses there after the A reports a 2.8 million barrel rise in crude supplies. Let's go check out that report because, they just keep coming in. We're going over here, go to the 10:30 release that happens just about every Wednesday unless there's a holiday that week. And we can see a big number that we're usually looking at, that 2.8 million right there. Seems small. It's a little bit more than expectations, lower than what we see. But what does the government report tell us? Well, if we go in, it says the commercial crude inventories, excluding those in the Strategic Petroleum Reserve, increased by another 2.8 million barrels from the previous week. At 482 million barrels, U.S. crude oil inventories remain near levels not seen in the last 80 years. So keep enjoying that cheaper gasoline. It is making it rough on, I know, the oil workers out here in Texas, having it so low. But they're just pumping that stuff out like crazy without even thinking twice about it, just letting it go. If we go over, we check out, we can check out a couple charts here in a minute. And we'll look at a few things. And let me see, I'll pull that up here in just a few minutes. And then let's see, while we're waiting on all that to load on up, let's see. My daughter wanted to announce this. I'm pretty excited. She's going to be running in the RFD TV American qualifier this weekend. So she ran last night. She had a good run and had a lot of fun doing that. And but she'll be running in the American qualifier, and this is against the best of the best. Fallon Teller, Charmaine James, Jackie Jitslow. So all of them will be competing in this. And she's going to go out and give it her best against them. It's a pretty big honor to be able to get to even run in the contest. Hold on, I got a whole bunch of these up. There we go. And that's her running last night. It's the exact same arena she'll be running in this weekend. We've been going out there every single Tuesday. So again, going out there every single Tuesday and school nights to give her a chance to practice running in this arena. Before the big one. So she took that a little bit wide, but she's doing really good. Getting really smooth with him. That's her horse, Comet. She has Comet and Hank and a couple others. And he is extremely fast. And she is actually just now really, you can see her just shaking those reins, getting them to go, 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 go. And so she'll be competing in that. She'll be competing in, of course, the 5D jackpot to get some cash. But also she'll be looking to compete and maybe secure a spot. So we don't know if it'll happen this time around, but either way, basically my goal was to make it where she had a chance to see what it was like, and she actually gets to run. She gets to run in two different qualifying races now in January, and the big American race actually takes place in the Dallas Cowboys Stadium. That's where the semifinals and the finals take place, and the purse is $1 million prize. So it's a big, big race. And so the fact that she's getting to run in 2 of those is pretty cool. And I'm proud of her for even, being able to, stand up and compete with all the big dogs out there. So yeah, she'll run Friday and Saturday and Sunday. This is her run from the previous week right there. She's getting faster and faster. This one, she was holding him back right there. And, but now she's getting to where she's not even holding him back anymore. So she's just letting him go. And what's funny is she's actually going to have to make him go a little slower on the first barrel. And that sounds odd. Like the whole goal is speed here. But she has to slow him down a little bit because see how he's going way wide on that first barrel? So to go faster and get that tighter, because otherwise she has to spend all this time correcting it going the second barrel, she's got to go slower to go faster. And, we were talking about that last night. I was talking about that with Jackie Jet Slow. She's one of the top NFR riders. And we're talking about how, sometimes you got to go slower to go faster because slower is smoother. And in trading, sometimes we got to go a little slower. Sometimes we got to back up. And, people get, I was talking to some traders about this. They get into these binaries that are faster, 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 faster. And, they can be addictive, but maybe not necessarily profitable. And it can be fun. It's fun to go fast, but it's not always going to help you accomplish your goal. Sometimes it's better to back up and go with the spreads. And they aren't near as slow as you think they are, and it might get you to your goals faster by backing up and go a little slower on a different product. And so just something to think about. Sometimes slower is faster. A couple other lessons is don't be afraid to share. Don't be afraid to learn and put yourself out there. I took Felicity out. I was out for a week, and I took her out to meet some of the best, and we were going through, and they were teaching us all these different things. And this is a picture of her horse Comet, and this black thing right here is called a hackamore. Okay, this little black thing going over his nose. And before that, we had it lower. It was down here. Well, if you rub your finger right here on top of his nose, it's like petting him. If you rub your finger up, you can actually see that his nostril goes up to right there. That's where the air hole is that comes out of the nose. Well, if this hackamore is leaning on top of this, which is where you'll see many people putting it, because unless somebody tells you, you don't know, then you are actually cutting off their air supply. Okay, basically you're holding their nose when you pull on the reins, and so they'll start shaking their head and would sort of like you do the same thing. Somebody's on your back and started holding your nose, and you didn't really breathe out of your mouth, you'd get a little upset also. And so we learned about that on hackamores, and so we adjusted the reins. Well, I'll tell you about that and another tip I found out and how that applies to trading when we get back. So stay right there.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome back here to the Diagnostic Trading Hour. We're talking about horses and how to apply it to trading. And I got a picture of Comet up here, and I was talking about how me and my daughter recently went to several horse clinics, spent the week out on the road, and went to work with some of the best cutting horse trainers, and which are the guys to go to if you want to get better in just about anything regarding horses. And anyway, so learned about this hackamore and how you need to basically just put your finger right there along their nose at the top there, just pet them on the nose, but you can feel where that wind pipes and make sure that the hackamore is above it. It puts pressure, helps you guide them. Notice he doesn't have a bit. My daughter doesn't even use a bit to steer this big beast of a horse here, and so I shared that. I posted that I learned about that. Well, as soon as I shared it, Jackie Jitslow, who, like I said, is a top rider. She actually qualified for the American last year. She qualified already this year. She already earned her spot. She got first place in the semifinals, and her horse tripped, and she got 8th place in the finals. So hopefully she'll rock it this year. And she said, hey, you need to get a chain that you can adjust easily. Well, on the other side, we happen to have a thing that makes it adjust easily. And she said, make it where this is this tie down. It basically keeps his head focused when he's turning around those barrels. I said, make sure the change is behind that or it won't be near as effective. And so put that on there. And let's see here. I think on that same picture, So I was like that. And she's like, yes, that's perfect. And I put it right behind the tie down. I wouldn't have known that if I didn't share what I thought I knew. Because you don't know what you don't know until someone who does know sees it and tells you. And so I put myself out there. Instead of trying to be the expert, I'm like, hey, this is what I learned. Let me share it with you. And someone said, hey, you need to fix this piece also. And I did. And I wouldn't have known to fix that. Something about it looked off to me, but I wasn't sure. I'm not an expert on horse gear. I'm becoming one, okay? But I wasn't one. And how hackamores worked specifically, it's a different I always used bits growing up. And I put myself out there. I let myself be potentially wrong, potentially corrected, so I could be better. And in this case, so the horse could actually have his gear on in the best way possible, and so my daughter could have the best chance of being successful. And I bring all that up because as traders, sometimes we get so caught up in, I want to look good. I want to look like I know everything. And we won't put ourselves out there. And one of the biggest mistakes I see newer traders make is, and sometimes even experienced ones because they like to look good, is they don't want to put their charts up. They don't want to share. They don't want to say, hey, here's what I did and here's why I did it. What do you think? Can I do it better? Am I doing it right? Should I keep doing it? They just don't put themselves out there. And if you don't share your charts, if you think you're going to figure it out by watching a video 45 times, okay, or by reading 10 more books or going to 3 more seminars, but you try to stay alone in your little cave and you won't put yourself out there and let yourself be corrected, you will continue to make mistakes that you don't even know you're making, and you will blame it on the wrong thing. If I wouldn't have fixed that, we would have blamed it on the horse needs to cool down. Maybe he needs a different supplement. Maybe he needs a different bit. Maybe he needs this. Maybe my daughter needs to do. No, man, fool, you just need to put the stupid thing in the right spot so you're not cutting off his air supply, and put the chin strap in the right spot so that way he gets the right amount of pressure at the right time. And I found that more errors in trading have been my own errors than they have been software errors or technology errors or the systems errors, or it's usually my risk management, me understanding something correctly, and I've needed somebody to help me see that. And so whether it be horses or whether it be something else, then you need to be able to be willing to put yourself out there. All right. So that is my lesson on horses today. All right. Let's see here. Looking on over at this. This week so far. Why did that get disconnected? That's weird. Okay. What do we got? Let's check out the news that you can use. And I'll open that up. Give me 1 second. We'll bring it up after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Alrighty, folks, we're going back here to the Diagnostic Trading Hour. And going through, I was checking out, we were talking about horses, we're talking about, sharing your charts and asking for help on those charts, not just trading in a little corner. And, just some good lessons there for you to learn as a trader. Let's see here. Let's see, what do we got? All right, Friday, we got NFP Day. So, what is NFP? Well, it's going to be front and center spotlight. Okay, it's the employment change and the unemployment rate and the non-farm payroll, all that with the Canadian coming out, which makes it even bigger. Okay? So, understand markets usually will get very flat and quiet going into it because they're expecting it to explode whenever the markets explode, basically when the number comes out. Okay? So if you know that, then you won't be surprised that there's not a whole lot happening before it. And then it will go berserk and it'll go all over the place. And then it often comes right on back. And so how do I usually trade NFP? Not the way most people would normally think to trade it. I like to trade the NFP in a more of a neutral standing. So I will go over and I will trade iron condors using daily, same day spreads. Most of the movement that happens on FP happens in the first 15 minutes. Okay? So on iron condors, I'm often going for as much time as I can get, because usually you get about that maximum move in that first 15 minutes or so. At 7 a.m., the spreads will be wider. Now, when I say wider, I mean floor to ceiling, not bid offer. Okay? But at 7 a.m., you'll get the 3 o'clock spreads that will pop up. You can also check out the 10 a.m. ones that open at 8 a.m. Those are your other choice for doing these. Now, if they're just stupid cheap, which sometimes they're just undervalued, implied volatility has been very, very low lately, okay? So if they have IV undervalued, which is always possible because IV's been low, even though employment has, is more on investors' mindsets right now because of the potential December rate increase, you might find that it's a great straddle. So I'm going to go over the condors with you, but again, they could be great straddles. Now, what are the average moves on this over the last couple years? Okay? And, based on the last 12 releases here. So we got the Aussie dollar usually moves 60 pips. Okay? So I like to get at least a 50 pip minimum profit, expecting it will go out of that in that first 15 minutes and then come on back in. Euro dollar usually moves at least 100 pips. Now, if I can go in, I can get a trade that could take profit by the time it moves 100 pips from where it's at before the release, like at 7 or 8 o'clock, then I may go ahead and take that trade. Okay? So 100 pips could be great. I want at least 60 on that for it to snap on back, because it snaps back usually harder. Pound dollar, I want at least 70 pips in minimum profit on iron condor. It's where I buy the lower spread and I sell the upper spread. And again, I expect about 100 pip move, so I'm expecting to go out, go into loss, and come on back. Dollar CAD, 75 pips is the average move. I'm looking for at least 60 pips between the two maximum profits and the bought lower spread, the sold upper spread for the iron condor. I want to get at least 60 on that. Dollar franc, want 60 pips on that one. It usually moves more. It usually moves 90 to 92 pips if you want to get right down and specific on it. Dollar yen usually moves 80 pips. Again, I want 60 on each one of these. I found if I try to go for the full amount, you just don't ever get the fill, okay? Now, if I can get them cheap enough to where I could hit a profit if it moved these distances, then that could actually be a great trade. So again, if you could pull off a straddle and you could take profit at 1-to-1 if the market moved the expected move for a 9 a.m., a 10 a.m., a 3 p.m. So you may end up doing straddles on 9 a.m. You may end up doing iron condors on 10 a.m. or 3 p.m. Then that's okay, and it may even be a better trade. Okay? Be really aware of your deviation levels as they are plotted. So because the market's often, if let's say it moves, 90 pips, but there's a deviation level at 84 pips, it can easily hit that and just bounce right off of it. So be aware of your implied volatility-based deviation levels. They are very, very accurate. If you want to have some fun, if you haven't got into this yet, but you've been doing NFP and you want an additional challenge on it, you can go in and you can do a synthetic straddle. Euro CAD and pound CAD for the euro. Okay, euro CAD and pound CAD. They often can move 100 to 150 pips on these pairs. You need to watch the euro CAD and pound CAD chart when you do this. If you're going to do this, now understand, Nadex doesn't have euro CAD and pound CAD, but you can synthetically make it. You can buy the euro dollar and buy the dollar CAD upper spread, which would make a euro CAD spread. And you can sell the euro dollar and the dollar CAD spread, which would be selling a lower spread. You go over, you watch the euro CAD chart. Again, 90% of the big move happens in the first 15 minutes. So after that time, you're probably looking to take profit on that if you're going for a straddle on it, okay? Because otherwise it pops back. So you could use a 9, 10, or 3 o'clock expiration. You'll get the 9s a lot cheaper, okay? And you can enter anytime between 7 for the 3 o'clock and 8:15 for the 9 or 10 o'clock expiration. Often the market will actually 7 you can enter for the 9 also. So you have to wait till 8:15 is the latest you want to enter. Often the market will remain flat after 11 all the way to 3 o'clock after NFP. So this can be a great iron butterfly time on FX. So just sort of depending upon how the report comes out. So just some, fun information there on the NFP and how to trade it this Friday. And I like trading it. I know a lot of you have got to where you like trading it quite a bit as well. So you need to be on top of that. On Thursday, we do have some important numbers coming out here. We got the pound is going to have their inflation report come out. Usually it's a very flat, not their inflation, but their asset. There we go. Asset and rate purchase facility reports coming out. And that comes out at 7. Usually it's very flat, but usually we also have the euro releasing their number right after, so it mutes the impact. So we may get a little bit more impact than normal. Usually we're looking for $30 of minimum profit, may even want a little bit more. Just be aware that that number usually gets muted by the euro interest rate announcement, and we're not going to get the euro interest rate announcement right after that like we normally do. We're also be getting the unemployment claims, and so I want to be out before then because, again, unemployment claims may actually have a little bit more of a shockwave effect today on interest rates, just like we had the NFP numbers coming out, and they had a little bit more of an impact on the interest rates today because employment is big in focus on whether or not they're going to change that number coming up in December. And let's see here. The U.S. preliminary non-farm productivity report is being released at 8:30 on Thursday. And so how can you trade that one? You also could look at that. Again, be a little bit more careful because we do have that number. Hold on one second. I got the wrong. Oh, where is it? It's already up. Yeah, this is the preliminary non-farm. Yeah, we don't want to do that one. Okay. So we already have the Thursday report, the Friday report. You can look at that for a neutral trade. I would be a little more cautious. Usually I look at that as a neutral trade. I'd be a little more cautious on that simply because of the sensitivity right now on everything with the FOMC. We also had CAD IV PMI coming on out on Thursday, and we're looking at the usual move on that from 10 to 12 is a $25 minimum profit. Okay, so $25 minimum profit on that. And let's see here. We're going down to the weekly natural gas inventory report coming on out. Often you can pull off a pretty cool straddle on that. You need to know what your expected moves are. You need to know what your deviation levels are. And usually happening right before the release. And also look at a strangle. Not my biggest fan. Usually I'm not a bigger fan of strangles. But meaning you buy an upper strike and sell a lower strike at 10:20 a.m. Looking for an 11 a.m. expiration. Look to take profit pretty quick as it moves. We go on down to the pound various reports, 4:30 a.m. iron condor, and manufacturing production, industrial production, trade balance reports, all that coming out at 4:30 a.m. on Thursday. And so basically you can hop in at 11 o'clock. You're going to look for a 7 a.m. expiration. And again, a minimum profit of $35. Be aware, RBA governor is going to be speaking a little bit at 8 o'clock tomorrow night, and that can cause things to move a little bit. They'll be having their rate statement as well coming on out. So all things that you just need to be aware of happening tomorrow evening. There will be some FOMC members talking tomorrow morning, and obviously everybody's nervous about it. Is there going to be a rate change? Is there not going to be a rate change? So you want to make sure you have that all hooked up and ready to go. And that pretty much covers most of our news trades that we'd want to cover for you right now. And with that, we can move on to some other interesting information. So let me go ahead and pull that up. And let's see, I don't know why that chart is giving me just a couple issues. Anyways, that covers NFP. One of the things I know I've talked to several traders about lately is having more than one play in your playbook. So many traders think they're going to find one system, one set of rules, and it's going to work for every single market condition. Unless that system allows for multiple market conditions, that's not the case. It won't work like that for you. You need a system that either allows for multiple market conditions, or you need a system, or you need to have multiple systems. Okay? You don't go out and play golf with just a driver. You don't play it with just a sand wedge. You don't play with just a putter or an iron. You have several different clubs. And You really, really have to do that because market conditions change. Sometimes you're stuck in a sand pit. Sometimes it's off the grass. Sometimes it's off the nice, flat, smooth putting green. And sometimes it's right off a tee. And so this is where you learn things like condors and butterflies when things are quiet, where you learn how to take small moves. And what used to be a small move of 30 points, we were talking about this last Friday, 20 or 30 or 40 points was a small move. Well, now 10 or 5 is a small move. You get in, you take profit, you get out, you go to the next trade. Okay? And you need to, learn how to be okay with that. And to be okay with, missing out on some trades occasionally. And you may even have to adjust your system slightly. You go in and you start seeing, I'm in here and I'm trading and I get a short and I decide I want to go short. Then I take profit and I get a long zone. And so I'm tightening my stops. I get out. And I may have to sit there for a little bit longer. But when I get a good trade, I can pounce it. And when it goes up and hits a level and it goes flat and oscillates on me, I can tighten my stop up and maybe I only make 3 or 5 or 8 points. Maybe I'm not making 30 points. Okay? But if you will learn to trade through flatter times, which we've had enough movement to have some decent trades today. Okay? But if you'll learn to trade through these various times, then you will be ready when it gets big. What's funny is people don't learn to trade during this, and they get all conservative, and they scout for like a point here and there, and they're just like picking up breadcrumbs everywhere. And then the thing starts moving, and they're like, oh, this is too crazy for me. I'm backing away. I see it every single time. When volatility kicks back in, people start backing away. I'm like, this is why you sit there every day was for these days. That's where the big money comes in. And if you can get 3 to 6 months a year where you can just pound it and pound it and pound it, that's where your big money's going to come from. Think about like a retail store. They make all their money like during Christmas. Most of them, a lot of times, they're in the red. They don't get into the black until what? Black Friday. That's what's called Black Friday, right? So that's where they start making all their money back right there. Right after Thanksgiving into Christmas. That's where they make the money back for the year. That's where they get positive. Fortunately, we don't have to do it just one time a year. It happens multiple times throughout the year, but you have to trade all the days to be there for the good days. And sometimes that means going in and grabbing those small profits. And then when things start picking up, you don't get shy. You've been dedicated. You've been disciplined, and you're ready for it. Look at things like implied volatility. Look at things like statistical, volatility. I go in, and one of the things I talk about often, I'll go in and I'll pull up charts and I'll look at seasonality on implied volatility for you. And we'll go in and we'll focus literally just on the seasonality of things like the VIX. And I'll literally tell you, okay, the market's probably going to go up, during this time, and implied volatility is probably going to go down during this time. Well, how do I know that? It's not anything special. It's like me telling you, there's probably going to be a lot of traffic at 8 a.m. on, 820 or I-35 at, 8 a.m. Well, is that magical that I know that? No. There's nothing special about it. It's just seasonality. And when you understand seasonality, you take advantage of it, then you can really go in and you can get an edge. You can know what to expect. You can know what kind of club might you want to be pulling out. I don't have to swing in the sand pit to figure out I need a sand wedge because I can look down and see the sand. So we'll look at some seasonality here when we get back. Y'all stay right there.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so we're going in making sure you have multiple plays in your playbook, making sure you know how to deal with choppy versus volatile, knowing how to do strangles, knowing how to do iron butterflies, even on 5 minutes. Sometimes they'll come in on this when it gets really flat. Learn one system. Demo it. Master it. It's a lot cheaper. Move to live, then learn a new one. Demo it, do it. Master it, move to live. If you find it's not working for you, then find another system, but don't go from live, not working to live, not working to live, not working. That's a very expensive lesson. Okay? If you learn a trending system first, don't go and learn 2 more trending systems at the same time. That isn't going to help you. Okay? So go from a trending system, then learn a range-bound strategy like iron butterflies or iron condors. Then learn certain volatility, random market strategies like strangles and straddles. Then learn some scalping strategies, like I teach slingshots and elevators, okay? So you're going to want some trending, some range-bound, some breakout volatility ones, and some scalping ones. Get different clubs in your bag, okay? That's one thing that I see so many people. I mean, they're literally one-trick ponies. That's all they got. And before I left off there, we were going to take a quick look. And this is a cool feature inside Thinkorswim. It has a few things I like. And right there we got the weekly. And as you can see, we're sort of on track for that. It usually goes up, but it started coming back down. This is the current volatility in the weekly, and drops into the end of the year. The volatility usually declines going into the rest of the year. Now, FOMC could change that up if they decide to go in and move things around. We'll get a little extra volatility on things like NFP and FOMC announcements. But beyond that, usually the market goes up, while the S&P, while it's going up, the VIX goes down. So you're going to have to get better and better at how to trade implied volatility. Okay, it is lower right now than it usually is this time of year. Usually it's around 20 to 23. Right now, we're all the way down around 14 and 15. Okay? So we're all the way again down around 14 and 15. Let's see here. All right. And so that's moving on down there. And we just need to expect it to stay probably low going into the rest of the year. So you need to play lower volatility strategies. And that's going to involve, taking smaller profits a lot and trading between ranges a lot and just being ready for that. Okay. I hope you'll have a great day, and I will see you this time next year. I'm just kidding. I'll see you right here tomorrow on the Diagnostic Trading Hour, and again Friday morning on the Bull Bear Binary Option Hour. Y'all have a great day.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.